Okay, good afternoon, everyone. So today we will cover the financial statement analysis. Sorry? Wait for what? You settle down, then later you pass, huh? No problem. The selections of the companies for your assignment should be based on first come, first serve, okay? I already listed out the company. Choose 2 companies from the same industry, or else your comparison, your analysis would be apple and orange later on, yeah? Okay, so let's move to the financial statement analysis. What are you doing there? Come on, I want to start. You're supposed to sit. I don't mind. You can sit. Later teach. Okay. Have a seat now. Okay. All right. The first question, it is on the horizontal analysis, right? You have been provided with 2 years data of this company. Okay. The list of the balances are provided. We need to show the percentage change, the changes. So when you say change, of course, from one point to another, meaning year 1 and year 2, we have to compare, right? And then the direction is a pattern, okay? Whether it's being increased or decreased from year 1 to year 2. Normally we compare last year and this year, right? And then provided that year 1 as the base year. So question already allocated. And normally in financial statement analysis, we always compare last year and this year. So we want to see the growth and the expansion from last year data, right? Okay, so when you say it is a horizontal, okay, horizontal, so we are going to compare horizontally, compare years, like here we have 2 columns, right? So horizontally, horizontal analysis. In vertical, we should be using vertical concept, yeah? Okay, for not receivables, line by line items, firstly find the change. So the difference, right? 30 last year, this year, 25,500. So what is the change? Increase or decrease? You need to determine the pattern. Last year 30, this year is 25,500. So there is a reduction, right? By 4,500. You all can see from that side. Are you sure? Because I try to use 2 screens. Yeah, maybe smaller for from your side. Maybe you can perhaps you change here if you want. I know the answer is I'm okay. So 4,500 divide with your base year, which is year 1 information, the value 30,000. So you use your calculator. Don't guess. Use your calculator, you get 15%. So this is the direction. It has been decreased. Okay, definitely you can have this thing in your assignment. So what could be the reason the notes receivable being reduced? Is there any good indicator if our notes receivables reduced? Note receivable is under current assets. It's a piece of document whereby it can be transferable. Okay, it is transferable. You can sell these note receivables. So notes receivable is a document to show that somebody owes us. And that's why you can sell it. It's a piece of document. So when you have reduction in note receivable, meaning you have a better collection, right? Because these receivables, they owe the business. They have amount owing to our business. They owe us. So now when my notes receivable reduce, it should tally with increase in your collection of credit sales, for instance. So that's how you can write in your assignment if you go by this horizontal analysis, item by items. That's beyond your tutorial. Your tutorial will focus on computations, but not on analysis. Okay, how to derive the analysis is based on the descriptions, on the explanation. I advise you all to ensure that you can score for your assignment. Okay, get the financial statement analysis reference book. We got a lot online or even our library. Okay, or maybe your textbook also is a book. It's a good guidance, but that's not much. You can go for financial statement analysis textbook or reference book. It's really, really good. Next, account receivables. From 90 last year, it increased, become, sorry, how to, how, how? I want to, eh, eh, how to remove this thing? Like this, Ish. Lemak. Oh, okay. Last year, year one, 90,000, and this year, year two, 106,200. So there was a change just by 16,200. So 90,000 is your base year, so 18%. So it results to increase in account receivables. What is the indicator when you have account receivables? What explanation that you can discuss in your assignment? When we have increase in account receivables, it shows that you have increase in your credit sales. When you have credit sales, there's only one issue. You're talking about, are we able to collect those credit sales in future? Yeah. So it would be good to have these account receivables, but we need to ensure that it is collectible. Okay. So you have to compare with your sales. If let's say sales increase by 40%, 30% representing by increase in account receivable, credit sales, very danger. Why? You don't collect cash. You might short of cash. These are the things that you can include in your discussion of your assignment. Retained earnings from 70 increase become 75. 77. So different by 7 over 70, base year 70. So 10% increase. When you have increase in retained earnings, the issue is, are we going to increase our dividends distribution? Why? Because dividends should be paid, should be distributed based on from utilizations of your retained earnings. You have retained earnings and only you pay dividend, right? So when I have this increase in retained earnings, does it will be utilized? How many percent of it will be utilized for dividend distribution? Or it might be there's no dividend will be paid. So there's the next decision when you have increase in retained earnings. Next item, 600, year 1, 654. Year 2 for sales, meaning increase in sales. Again, we got two types of sales, cash sales or credit sales. Cash sales, everyone are happy. Okay, everyone will be very, very happy with cash sales. But what about credit sales? Are we able to collect those sales? Okay, then we need to make sure that if it is a credit sales, then our credit control department must have a good strategy and to chase all these credit sales. Operating expenses, 200,000 reduced to 160,000. If you see the difference, 40,000 divided with 200,000, 20% decrease. It can explain, okay, the possibility why for this company the sales being increased by this much, because they are able to reduce the operating expenses. As you know, how do we compute net profit or net income? Sales revenue minus expenses. Okay, if you can maintain your sales while reducing your operating costs, operating expenses, definitely you can have a better score for this reduction in the operating costs. But as you know, for a business, we have other expenses as well, like sales and distribution expenses, finance costs, finance expenses, can be selling and administration. Here they just tell you about operating expenses. So we can't predict much. Okay, what is truly does these operating expenses being reduced lead to increase in sales. Next, income tax payable. This is predicted, right? Because there was an increase in your sales. Yeah, and then there is a reduction in my operating expenses here. So when your sales goes up, your operating expenses reduce. Tendency, you are making more profit as compared to past year, right? More profit, higher taxable income. Definitely you will pay more tax. So the difference by 8,000, 8,000 over 20,000. So 40% increase in income tax payable. That's all, horizontal. Very simple, maths. But the explanation you don't have to write, as long as the question doesn't state you are required to do so. But one that I discussed just now is for your assignment. You must develop a proper sentence and justifications on the pattern and the trend. Okay, don't give something like this. You give something like this, they'll increase by 100%. That's it. Less a mark. Just let's say 20, I can give you 10. You need to include the value added information, which I can't see from the figure. You have to read the financial statements. For your assignment, only two things, right? The statement of financial position and other comprehensive income, and your statement of financial position. Okay, your tutorial also will emphasize on these two statements, not other than that. If we need such information, you are going to have it via the additional information. Okay, now we move to question 2. We have been provided with the revenue and expense of the company, details on year 1 and year 2. So just now we have information on the statement of financial position. So here, question 2, we have related to statement of profit or loss. In UK, they prefer called income statement. You have this data, admin expense, cost of goods sold, income tax, sales, selling expenses. Prepare a comparative income statement. Income statement here is your statement of profit or loss. Prepare, meaning in your answer, you must show the format. Okay, you must prepare the SOPL. You cannot just copy from the question based on the line by line items provided. You have to prepare the SOPL. Okay, because you have been instructed here. We are going to use vertical analysis. The previous question, horizontal, this way. Now vertical. Okay? Stating each item for both years as a percent of sales. As a percent of sales, meaning any computations to see the pattern, the trend is based on sales, meaning sales will be your denominator. Okay? Your sales will be your denominator. You know denominator, right? Huh. So line by line, COGS, year 2, done. This is the format, sales minus COGS, you get gross profit minus all the expenses, you get profit before tax, and then we minus the tax, we get the net profit or net income. This format will not be provided in exam. You have to prepare. Yeah? So let's say I take this COGS, 350 over 800,000, 43.8%. Okay, in exam, because I'm the one who will mark your paper, please provide me, if let's say you have answer with decimal point, provide, you round up your answers to 2 decimal points. Let's say 43.83. Let's say it is 43.856789. You know round up, right? Not round down, huh? Round up. 43.856. So I said 2 decimal points. Your answer should be 43.86%. Okay? So if my answer scheme give me only 1 decimal point, then you are safe. Do not round up, become 44%. You will miss the mark. Okay? 2 decimal point. Because in accounting, we always come with cents, right? 10 ringgit, 80 cents. So leave it 2 decimal point will be sufficient. Okay, fit? Fit. Next, gross profit. 450 over 800. Always use the sales because stated here, both years as a percent of sales. So everything divide by sales. 450 divide 800, I get 56.2. 150 divide 800, I get this. 37 divide 800, we get this. Total operating expenses, this plus this, 187. Income before income tax, 450 minus 187. 450 minus 187, 263. So 263 over 800, you get 32.8. Next, we minus the income tax. Net profit after tax. So we minus this income tax. So provided is 40. So 263 minus 40, you get 223. So 40 over 800, we have this 5%. 223 over 800, we have this 27.8%. Then we apply the same way for year 1. 320 over 700, 45.7. All this information from here, from the question. Okay? So that is vertical analysis. So in this question, first, you have been tasked to prepare the SOPL. Second, conduct the analysis. And choose the correct base. Like here, they provide percent of sales over percentage of sales. Right? Any question? Okay? No issue? Okay, if no issue, no doubt. Can you try question 3? You start with horizontal analysis. Show the percentage change for each balance sheet item using year 1 as a base year. Something like Question 1. I'll let you all 10 minutes. Okay, try one. Where is the list? There. Company list. No. Sure? How? This one? Yeah. This minus this. Actually, not a proper presentation because they don't have two columns. Everything in one column. This minus this, you get this. Actually, this minus this, you get this one. 450 minus 150 minus 37, you get 187. Eh, no. Wait, sorry. Eh, no. Sorry. This minus this, you get this. This is the total of these two. If you don't want this total, this, you get this. Listen. 450 gross profit, right? Minus 150 minus 37, you will get 263. This format, what they do, they plus this one first. They get one total. So 450 is 187, you get this much. If this presentation is confusing, it's okay. You can skip this one. You straight away put parentheses here. Minus. Question actually. Smell mommy, yeah. Someone wants to. Someone eat mommy, yeah. Mommy's plus name. Oh, the list. Hey, where is my list? My assignment list. Hey, pass around. Pass around because everyone is waiting. Habis guys, Abdullah or Faizullah. They're not around. Wait. Like that. Fine, okay. Faizullah, Zulu, Violet. Oh, next to you. Your fate. Zulu. Yes. Okay, I can recall. Abdullah. 1, 2, 3, 4. 4 missing. Make sure your assignment choose 2 companies from the same industry. Question? Guys, this topic is a favorite topic for those who love math. Or I think those who don't love math also, they like this topic because it's easy to score as compared to the financial reports. Your assignment Your assignment, computational ratio, right? Further question number 4. 4, 5, 6. That's exactly your assignment computation. I don't know, for your exam, does the formula be provided or not? Normally, no. You have to memorize. Okay. Yes. No. Midterm up to last week tutorial. Lecture 4, part 2. Lecture 4, not chapter 4. Lecture 4, part 2. Tutorial up to last week. Financial statement with adjustment. It's a lot of mark normally. The right group. Group 2. Your group 2. Okay, question 3. Part A. We conduct horizontal analysis. Okay, show the percentage change for each balance sheet item. In year 1 as a base year. So we refer to year 1 as a base year and then we see the changes, horizontal. Very simple, right? You compare 445 and 280. There was an increase in current asset by 58.9%. Okay, 58.9%. If you have reduction, here they put in parentheses. This one is increasing. That's why here the percentage change in positive. No reduction. Okay, for this company. Plant assets, 520 last year, 680 this year. So 160 over 520, you get 30.8. This one, 165 over 280, 58.9. That's all for the assets. So for the total, different 800 and 1125. So 325 over 800, 40.6. As you can see, their current asset goes up. What could be the reason? Normally, increase in stock, inventory. They produce goods. They have a lot of closing inventory. Okay. If you have stock up means you have a lot of stock in the store. Yeah, to one extent, we don't have any stock page or disruption in production. However, another idea is you keep too much stock in your store. If you keep too much stock in the store, there's a probability of theft, damage. Yeah. So these are the things, the justification that you can include in your assignment. Okay. Other than that, increase in current asset may lead you to increase in trade receivables. Just now I already told you. Yes, having sales is good, but credit sales very dangerous. You might lose these sales because your customer bought and then they say they will pay later, but there's no later actually. They're gone, right? If this current asset is mainly due to increase in cash, that is very, very good. Increase in bank, that's very, very good. But bank, you have to be careful. If let's say my bank goes up, it could be because you already have, or you just have a loan. You have loan, meaning liability goes up. That's why your bank goes up. Also, not really healthy. Yeah. If let's say it's a long-term loan, the moment the company go for loan, it indicates that their leverage is very high, meaning they don't have cash. They go for loan. If the company is smart and their reputation is good, they have chances to sell their company share. Okay, if they sell shares, so the investor can buy this share. Investor, we don't have to pay interest. We should pay dividend. Yeah, and this dividend can be adjusted, meaning I can pay high dividend or low dividend, or I don't want to pay. That's happened, yeah. But if you have loan, remember, no matter you have loss for that year, no matter you don't have money, make sure you pay the loan, right? And the loan, you borrow 100, you must pay back 250 because there's an interest charged by the bank. So you can put this thing inside your assignments discussion. Okay? So plant asset, in this question, it's increased by almost 31%. It's a lot. If I look at the long-term debt in this question, you see the long-term debt increased by 59.4. I can presume that the increase in my plant asset has been funded by increase in my debt. That's how you can explain in your assignment. Okay, current liabilities. You see increase so much. Increase so much. It could be they produce a lot of stock and then they involve in credit purchases. So their trade payables amount goes up significantly because their current asset consists of increase in so much of their asset. Their stock, their inventory. They stock up their stock. Okay? You see, this is how we can interpret from the numbers. Okay. Long-term debt. And then you see my current asset increased by 59%. My current liability increased almost by 138%. You should know, for business, for organizations, you will use your current asset to settle your short-term debt. What is short-term debt? Here, your current liability. In other words, you will use your current asset to settle your current liabilities. If my current liability increased by 140 almost, and here only 60% increase, this company might have big problem. in cash management. They have cash decrease. If they prepare the cash flow statement, you can see lah, if you want to extend your analysis, you check their cash flow statement. It should be a negative value. If you keep having this negative, that's the end, you are going to borrow money. You have higher loan. Okay. Common stock. You see, this company, they don't sell their shares. It's only 1.6% increase. Not much. They are able to sell their shares. Because when you sell shares, remember, and you offer shares to the public, you collect money. So your equity goes up, your cash goes up. But here, I can see that they can't sell their company share. That's why they need to go to a very high value on this debt, the long-term debt. Could be the loan, long-term loan. Okay. Next, retained earnings. Their retained earnings increased by 30%. So retained earnings consists of opening retained earning plus this year net profit minus, opening plus net profit. So you get your closing balance of retained earning. If you have any dividend, you minus lah. Here we don't have dividend, is it? We don't have dividend. So it seems like, yeah, our net profit increase. However, do we have sufficient profit to settle the loan repayment? Okay, and don't forget, this asset, it will depreciate in value. So your expenses is going to be increased significantly for this depreciation of plant asset. If land, okay, no depreciation. Okay, and also don't forget, you see we have 30% increase to cover payment of short-term debt. Too much here. It's unhealthy. Okay, so you can include all these issues in your assignment reports. Okay, that is horizontal analysis. Vertical analysis, something like question 2 just now, we list down and then based on the total. Okay, here total assets. Vertical, right? So 445 over 1125 for the current asset. So you will get 39.56 or 39.6 lah. 445 over 1125. You get a 9.6. 680 over 1125, I get 60.4. Total asset being influenced by increase in plant assets. And in this company for year 2. Year 1, same thing. 520 over 800, 280 over 800. So you get this figure. Then we apply for each item of liability and equity. 285 over 1125. You get 25.3. 255 over 1125. 22.7. 325 over 1125. 28.9. 260 over 1125. 23.1%. So from here you can see, the long-term debt is about 23%. Current liability, 25%. So if I plus total liability, 25.3 plus 22.7 is nearly 50% of the equity. Okay, sorry, yes, total equity, 50% represented by debt, by liability. It's not healthy. Meaning, you'll be busy, generate profit to pay your liability. Not to make your business getting wealth, the wealth. Okay, you prosper your business. You are busy, settle down your loan, settle your short-term debt, short-term liabilities. We want to have a business which is progress well, right? Not only just survive paying all these liabilities. So if you come across this kind of company, you can see something like the one I mentioned just now. Okay? And then we can compare year one and year two. It's not nothing much. But on this side, you can see 40% common stock. Now it changed, reduced in the stock issuance. What does it mean? It could be the investor pull back their investment. I want my money back. That's why the number of shares being reduced. They are not happy. Could be. And you see, it consistent, their long-term debt last year and this year. The short-term debt increased 10%. Their retained earning as compared to last year being dropped. So there's a lot of things you can highlight if you have come across this kind of analysis for your assignment. Okay, that's all question 3. Now, here they put the question request 1 decimal place. But for your exam, I advise you 2 decimal. Okay, I let you all 10 minutes break. Then we continue after this. So for your midterm, we cover up to lecture 4, part 2. Not topic 4, yeah? Lecture 4. So your tutorial should be covered up to last week tutorial. Financial statement with adjustment. Yeah. And normally for that topic, it will grant a lot of mark. And it's really time consuming. You have 2 hours. And normally it comes with 4 questions. A student told me that there would be a theory questions. How many mark? I have no idea because I don't involve in setting up your papers. Okay. Would you like to try this question, or some of you already proceed with the answer? We are late for 15 minutes. Try the question. Sure. This teacher I think wrong. 6 is the week. Okay, you check lecture week 6. What the content? Check. You check. Tell me. Luckily. What else? People were confused. You check week 6 lecture. Which topic you cover? Wow. Good night. Good night, Abdullah. With a new hair. Correct. Tui. Very danger, man. Very danger. Luckily to me. Guys, where is it? In the Moodle. In the Moodle announcement, Dr. Nick put there lecture 6. Lecture 6 meaning lecture week 6. Lecture week 6. You look at the topic. That is financial statement with adjustment. Correct, Study your lecture slide up to week 6. Study your tutorial question up to week 7. Because week 7, you have your financial statement with adjustment. Yeah? Luckily to me. Then I have to highlight my student. Later on, they just study.
All of them will be like questions or balances.
You mean balances is something like
Balance
a tutorial?
tutorial first, second, there were questions. Questions will be there or not.
I can say that is similar to your tutorial question for the computation part. It can be. Example like open up ledger, T account, debit credit we have, right?
Yeah.
Of course, financial statement with adjustment last week. Remember, you have to prepare your statement of profit or loss and statement of financial position. Normally, that topic got a lot of marks, yeah? Travis? A lot of marks last week one. And then chapter 1. Chapter 1 can be your effect on your accounting equation. Asset goes up, equity goes up. How much? Something like that. Counter equation. We have right a lot. And also theory. Theory, I got no idea. Maybe the way he cover.
Theories, yeah.
Right. He said got theory because my student from other group asked him. Dr. Nick said got theory.
Theory and financial statement for and adjusting. And
That is last week tutorial. You can have from chapter 1. You can have also from the what do we have? The balancing, open ledger, close ledger, like prepare cash and bank account. That's ledger, right? That day. Can be. You open ledger, after that prepare trial balance. Can be. You must know your debit credit. You have to refer back my video if you're confused. Try question 5. This is totally exactly your assignment. That's why I want you all to try it. You don't try, then you can't imagine. Abdullah, just now I already distribute the that one good. Yes, that one. The selection of the company. Make sure you write your name list in the correct group. Okay. I already label your group accordingly. You are group 2. Group 2. Group 2. Don't go to other group. Later on, I want to key in your mark. Headache. I don't know where are you from. Choose the right group to write your name, please. Today, my daughter sent me.
How should I write this? It's like we should
You should choose two companies from the same industries.
same.
Same industry, sorry, same industry, yes. And then write the leader's name. Just choose anyone to be the leaders and then which group you are from. You choose two companies. See, these two companies already selected.
And here,
Same industry, yeah.
right here.
Then your name list. Go to group 2. Yours is group 2. Okay, I think the next.
It's done. So
Group 2 here. Any of your members
group
here?
2 from here.
Then right here. Group 3, then your selected company. If today you can't select, you write down first the student name and the student ID. Okay.
Thank you.
All right. How many you got?
Thanks. Yes.
Actually, almost all the thing is here. Yes. But it's not for individual question. It could be included. It could be included somehow in the question. Aduh, hai. You are ni. I can help you to mark your paper. To answer. Very unethical. Then finally. Help you to mark. I'll mark your paper. Yeah. Final also lah. Final I mark, midterm I mark, assignment I mark. What's your aim for this paper? A. Oh no. Wow, you need to have a good target. If you do your tutorial, I think B plus in your hand. It's not one attempt lah. It should be maybe 5 attempts, 6 attempts until you know well about the question. The tutorial is very good. It can help you a lot. Not me. Yeah. Because I saw passing question, it's almost like a tutorial. The theory one is not predictable. Theory one, I got no idea because I also don't teach you lecture, right? Because lectures like some theories is there, right? This semester I have 3 subjects. Counting information system, final year student, and then second year student. Financial accounting 2. Advanced. Not advanced. Intermediate accounting lah. Side. Are you okay, Abdullah?
Okay.
Is it shoes? Exit shoes? No. Is it? No. What is it, brand? Is it right? I don't buy it. Huh? Okay, good. Sudah 4 tahun macam mana saya tahu? Yeah, running shoes is very nice. Nowadays, but you are very expensive. Last time when I was here, that is a local brand, but now I think it's international brand. Then but I like to buy this kind of shoes. Yeah, it's expensive, but it can last long.
On the
Malaysia is very good, you know. I said this is the one to run for your competition. Today, for this attire is not suitable to wear the sneakers. I got no choice. But I see this shoes is already very bad. It's good I wear sneakers.
just your phone.
Wear heels on sometimes pain. Because this today I have 6 hours class standing. But if I wear this one, I think fine. This one new already, it wasn't change. This shoe is very good. Yes. Charles and Keith is not that expensive, but it's very good quality. I bought Vinci, sometimes it's very pain. Wow, talking about shoes. Yeah. Assignment, find the financial statement analysis textbook in the library. Then you can see. Ah, you never go to library? No. It's a very nice library. Go and find it. I want to study where. In the book, then it makes your life easy. Or you can go online. Okay, your assignment also we have all now it's fine. But the book normally they give you one question like your assignment, then they teach you how to analyze. Sometimes you just can copy their sentence, put inside your assignment. Because your assignment, we don't have plagiarism. Okay. Financial statement analysis. You find in the library.
Attendance is easy.
Oh, I think
I should press the spot.
you got it. So you can sign half.
No. I don't sign for him. I have to write his name.
Oh. And you signed your attendance already? No yet, right? Yeah. No, I mean you sign your name.
No.
You're
I
late.
don't do this.
Take it. Bring to your table.
Okay.
Okay. I think we can discuss now for question 5. All right, question 5. We have provided with the financial statements of a company. Okay, it consists of your statement of financial position as well as your statement of P&L. Again, this is UK book. That's why it's written income statement, equivalent to our SOPL, statement of profit or loss. Okay, so the company is generated net profit, net income of 70,000. And then provided in the additional information, the cash dividends paid 23,000. And then the unit shares, numbers of shares is 30,000 units. And the value of shares, the share price, 21 ringgit per share. We need to compute the following ratios for year 20x5 only. In exam, they might ask you 2 years, meaning you need to ensure you got sufficient time to prepare the answers. That's why you must rehearse, repeat and repeat, because the formula was not provided. Okay, in the exam, you have to memorize. Okay, current ratio. What is the formula? Current asset over current liability. So go and find where is your current asset. Should be under financial position. Remember, SOFP consists of asset, liability, equity. The first day I met you all. Okay? SOFP, statement of financial position, consists of A plus A plus. A equal to L plus E. Right? And then SOPL, only 2 things, which is your, yes, revenues and the expenses. Okay? Don't mix up, huh? So of course I know I want to find current ratio, I should go to SOFP. Some students they still lost, So they are busy retrieving where is the data. So they're already wasting time. So you must know this concept. We have the asset, liability, and equity in the statement of financial position. We have all the revenue and expenses inside our SOPL, statement of profit or loss. So my current ratio, the formula is current asset over current liability. So my current ratio lagi. Current asset. Our current asset is 50,000 plus 50,000 plus 15,000 plus 25. So you will get 140,000. For year 20x5, question asks you to compute 20x5 ratio. Your assignment both year, you must compute, right? Okay, so if you plus 50 plus 50 plus 15 plus 25, total current asset 140 for year 20x5. Over current liability. So where is my current liability in this question? It should be your accounts payable plus short-term notes payable. Bond, guys, bonds is a long term. Bonds, the shortest one, 3 years. There's no bond with 1 year. You know bond? Bond is a investment, one of the investment, which if I issue bond, meaning I don't have money. The company has no money. They want to borrow from the public, they can issue this bond. Okay, so as a way of appreciation, the public who buy this or who bought this bond, I'm going to give them a coupon rate, we call it. I'm not sure whether you learn somehow in your syllabus these bonds. Have you ever heard the terms before? Not James Bond, huh? This is not James Bond. Yeah, same term, bonds. Not James Bond 007, okay? This bond is a long-term liability. If I issue this bond, this is my liability. If I purchase bond, it is my investment. So here it's so clear. It is under liability. This one, you see? Why? Because I have term payable, meaning we need to pay back the investor's money. This is one of the instruments that you can use to raise your capital, to get money, to run your business. Okay? And this bond normally, the coupon rate, the return rate is very low. But it is the most secured investment in this world. That's why it's very low. Like Malaysia last time we offered 1998. We call Bond Merdeka. Merdeka means independent. Bond Merdeka, 1998. How old are you? Have you born? Oh, still in the heaven. 1998, I already form 5. 17 years old. That's the last bond that being issued by the Malaysian government. How much is the, how many percent of the return rate? 2%. Very low. My auntie bought it because I'm high school. I don't bother all this bond, just bond. I don't bother. Then I accompany her. Then I know, oh, it's very low return. She invests 2,000. She got just 200 something. Very, very low. So in your account, it is bonds payable, so liability. It's a long term. Okay, you cannot take back your money. You have to wait until it's become matured. There's a maturity level on this investment if you buy. Here is bonds payable, right? In the question, liability. Long-term liability. So don't take the long-term liability because we want to compute current ratio. So just take this 20 for accounts payable and short-term note payable. So I get this one. Okay, where is the answer? I think I should make it smaller. 2.3 to 1. Guys, please pronounce it correctly. 2.3. Uncle, listen here. 2.321. Don't say later this double dot. Okay? How to pronounce this? 2.321. 2. T-O. This is simple ratio, we call it. Meaning, for every 1 ringgit of current liability, the company has 2.3 ringgit of current asset. Meaning, I have 2.3 times ability to pay the current liability. This is current liability, is your short-term debt, right? This is your current asset. Current assets. The higher, the better. The higher the current ratio, the better. And because you have sufficient liquid asset to settle your short-term debt. 2.3 is your current ratio. Sorry, current asset. Current asset. Over current liability. So of course, the higher the better. If you have like 0.528, oh, this is, I think, they shut their business. Okay, unhealthy. All right, that's on current ratio. One more thing. In exam, you don't write simple ratio. You give me percentage, minus mark. Some ratio, the analysis is going to be like irrelevant or inappropriate if you use the wrong, how to say, measurement. Here in current ratio, we use simple ratio. Very seldom we use percentage. Okay? Okay. Talking about whether your company is having good current ratio or not, it depends on industry. You can Google. You type current ratio for automotive industry in Malaysia. Maybe you want to extend your analysis. You compare current ratio of automotive industry in China. Then you can see the huge, maybe huge different or maybe similar. I have no idea. Or maybe you want to have a similar analysis, which you compare with current ratio of automotive industry in Indonesia, for example. Indonesia produces a lot, but also it's an imported car, right? Imported car. Okay, next. Return on ordinary shareholders' equity. So return here is actually your net profit. 70,000 here is your net profit. This one, net income. Over shareholders' equity, we need to take average effect. So where is your shareholders' equity? These two, 150 plus 110 for year 2005. So 150 plus 110. This is average. That's why they divide by 2. So 150 plus 110, I get 260. 150 plus 70, 220. I need to take average rate. There should be a reason why this shareholders' equity we take average effect, like average inventory. Because you have some of the profits, okay, retained earning, like retained earning is so obvious, right? Last year plus this year, right? You compute your retained earnings, statement changes of equity, your retained earnings, opening balance of your retained earnings, so much, and then you plus profit for the year, so much. So you get, this is what we call as closing balance of retained earning. That's the reason we use this one. This is last year one. That's why for your shareholders' equity, we have to divide by 2, which involve last year and this year. You remember just now the question asked you to compute ratio for 20x5, but some ratio is involved last year. This is one of the reasons. Retained earning, why we should divide by 2, because you have value of last year balance. Okay. Then for this this ratio, okay, it is appropriate to explain it in percentage. Okay, in percentage. Next, EPS. Earning per share. How to compute? Net profit 70,000 divide with the number of shares. I have here in the additional information 30,000 unit. So 70,000 ringgit divide by 30,000 shares. So you get the answer is 2.33 actually per share. This is the best that you can write about this EPS. Earning per share. Remember, this is unit. Okay. And of course, you can't find here. They don't provide you in the amount. Later you will see in the question 5 or 6. This is 5 or 6, question 6. Okay, done with EPS. We go to price earning ratio. Price earning ratio, get your share price per unit. You see, the 21 ringgit per share. So 21 divide with your EPS. So meaning in exam, if your EPS, you made mistake, of course, this one will be affected. This one, we use times. Okay, to explain the ratio, we use times. Same thing. You just write 9, your mark might be deducted. Depends on the answer scheme now. But it can, we can penalty. If you should have time, you write it in percentage. Your mark can be deducted. Subject to the answer scheme lah. If your turning put mark for this times the measurement, then your mark will be deducted. But when you work in future, you cannot make mistake on this lah. Because the way you measure and the measurement in percentage, in simple ratio, in times, it explains your analysis. So you cannot wrong, cannot have a mistake on this. Okay, next, acid test ratio. Some book call it as quick ratio. QUICK. When you compute this quick ratio, just now our current ratio, we have the list of current asset, right? We exclude the inventory. So go to your current asset. Just now for current ratio, this 140, we plus 50, 50, 15, 25. For quick ratio, current asset, we just take 50, 15, 25. So you will get 90. 50, 15, 25. 90. What's good about this acid test ratio or quick ratio? Some company, their stock, they need to keep for so long in the store before it can be sold. Example like car, sometimes park there for 1 year, then only we can sell it. But if let's say your company producing cake, I don't think so. You keep 1 year cake, right? I think cake got bacteria already. 1 year. Contaminated. Some product, it can't last long, right? So we remove this inventory because we can't promise. We produce today, tomorrow we sell. We produce now, next hour we sell. We can't promise that. That's why quick ratio, we exclude inventory. Yeah. So I get 15 plus 15, 50 plus 15 plus 25, 90. Over current liability. Current liability, you have these two. 20 plus 40, 60. This one also we can use simple ratio. Something like this one, your current ratio. Actually, this is the siblings. Normally, these two is very famous. Very, very famous in the industry. If you become an accountant, definitely your boss will ask, what is the current ratio? What is the quick ratio? That's the first thing. After that, profit margin. They will ask. It's very famous ratio to explain about the health of the company. Okay, next, account receivable turnover. Account receivable turnover. So 400,000 is my sales. You remember that day I told you I can use these 3 terms to explain or to justify my sales. Sales, turnover, revenue. Any of these 3 terms can be used in the exam. Then later on, you want to prepare your SOPL, you ask me, where is the sales? In the question, we give you turnover, we give you revenue. So that's also sales. So here, my turnover is this one, the sales. So 400,000. Over receivables, we take average receivables. Same story. We don't know when these receivables being recorded. It could be since last year. So that's why to make the analysis logic or relevant, we divide by 2. The last year one and this year. So for that, go to your statement of financial position, right? Asset. Go to SOFP. So you have this 50 plus 30. We divide by 2. You settle this one first, okay? You settle this one first. Not 400 divide 80 divide 2. Gone. You settle your denominator first. Okay? Maths, you settle the denominator first. Then only 400 divide the answer of this. Okay? Also, this one also sometimes affects student answer. Faith, can you follow me, Faith? Okay? Definitely, I have some student whereby 400 divide 80 divide 2. You settle your denominator first and then this divide the total answer of your denominator. Okay, for account receivable turnover, 10 times. Meaning out of my sales, 10 times consider my receivables. The higher meaning you got a lot of your sales, which is your trade receivable, credit sales, unhealthy. Okay, next, time interest earned. This interest, you need to pay interest because you have loan, for example. Interest paid. This is interest paid. So where is my interest? Interest is expenses. Interest is expense. So it's part of your expenses. Go to SOPL. Here, this is my interest expense. You see, interest expense here, 18. This one is tax. Interest expense. You pay this interest. So here, this is the interest expense. And then your numerator is the net profit before interest. Or in accounting, we call EBI. Earning before interest. So where is my earning before interest? This is the interest. So if I want to know earning before interest, of course, this one, right? Agree? This is my interest expense. I want to know my profit. Earning is profit. Profit before interest. So this is the one. Which is this minus this. I get 160. And then I plus, minus, your operating expenses is 42. So gross profit 160 minus your operating expenses. I cannot reach. Easier. Gross profit minus 42, your operating expenses, you get 118. So I know that this is my earning before interest. Or you see the working, 70 net income, plus your expense, it's a reverse, plus 30, because this one expenses you minus, right? 70 plus 30 plus 18. I will get this. Same thing. Okay? Here we use times, meaning for the profit that I get, 6.6 times of my profit used to pay the interest. So the higher, meaning more profit need to be used to pay the interest. That's how it can be explained. Next, profit margin. This is also very famous. Profit margin, get your net profit, net income over your sales. So net income over sales, 70.5. Meaning, For every 1 ringgit of sale, I get almost 18 cents of profit. 1 ringgit of sales, we can generate 18 cents of profit. Too little. Maybe if we can make it 50 cent profit, 60 cents, 70 cents, 80 cents, oh, that's very good. Very, very high. Okay? So the higher the better for this profit margin. Next, inventory turnover. The formula is COGS. Why we take COGS? Because your stock, the changes of stock inside your COGS, right? How to compute COGS? Opening inventory plus purchases, plus cost of purchases, minus return outwards, minus closing inventory. You see, all the stock movement is there. So that's why we take the COGS. So 240 COGS divide with your, you see, this one also average. Why? Because some of the stocks from last year one. So that's why you take average effect. So where is your inventory? Here, inventory 50 this year, 20x5. Last year, 70. So 50 plus 70 divided by 2. We call it as average inventory. Settle your denominator. And then 240 divide the answers of this one. Okay. Then we get the answer also in times. How many, it's talking about how fast you can sell your stock, this inventory turnover. So if you get 10 times, meaning in 1 year, you sell your stock 10 times. You refurnish your stock 10 times. It shows that you produce, you sell. You produce, you sell. So the lower, not good. We want a higher one. Next, days in inventory. Okay, this one depends on the question. If I ask you in terms of daily basis, so 365 divide with your inventory turnover. If I want you to make it in weekly basis, so 52, you got 1 year, 52 weeks, right? So 52 divide 4 times. Divide 4 lah. If I want in monthly basis, 12 divide by 4. Okay. It says how long you take to sell your stock. How long you take to sell your stock, to clear your stock. Okay. So the quicker the better, right? We don't want to keep so long your stock in your store. We got issues on storing, someone steal it, and then security we need to pay. And then let's say there's a natural disaster, flood, earthquake. You see, all this is a cost for the business. Next, payout ratio. Okay, how to compute? Find your dividend. Payout, what you pay? The dividend. So here, 23,000 divide with your net income. Meaning how many percent out of my net income will be used to distribute dividend, to pay dividend. 32.9. The higher the better lah. For the investor. But for the company, not good. Because the more dividend you pay, your retained earning will be reduced. But at the same time, you must take care your investor too. If you don't pay them dividend, they are not happy. They will pull their investment. So you can put all this inside your assignment. Yeah. And then return on asset. Okay, return on asset, your net profit 70,000 divide with the average asset. So average asset that I have 400 for 20x5, 500 for 20x4. Again, why average? Because some of the asset which is from last year. That's why you need to get the average asset. Okay, so we divide by 2. So you settle your denominator first, and then 70 divide with this. The answers. So you get 15.6%. This one also we multiply by percent. So it's more appropriate to explain in percent. Because the purpose of buying asset, we use asset to generate revenue. When you have revenue, then only you can have that profit, right? If you have asset, but you don't utilize it to generate revenue, to make profit, Better you sell the asset. Huh? Asset utilization is low, not good. Okay. I think I stop here. You can try question 6, similar to question 5. The only thing I just want to highlight on the, is it this question? Oh, not this question, guys. Question 4. Just now, the share price. You see here, in the additional information, I don't get the number of unit shares. But from here, this item, I can know, this one. I can know how many units. You see, this is year 20x5. My share price is 150. One share cost me 5 ringgit. Can I know the number of unit shares? How can I know? 150,000 ringgit. 150,000 ringgit. Okay. Each shares RM 5 ringgit. I want to find the quantity. Can I get P times Q, right? Price multiply quantity. So here is the price, 5 ringgit. Quantity, I don't know. I get RM 150,000. Can I find the Q? This divide this, right? Hey, come on, your maths. This is basic, man. 150,000 ringgit divide by 5 ringgit, I can find my Q. Right? Okay lah, you don't know the rule of thumb P multiply Q equal to the total amount. Go back to the basic. This multiplies this. If I know one of this item, of course I can find this. Don't tell me you don't know. Okay, so how many shares does this company has? 150,000 ringgit divided by 5. So I have how much? 30 30,000. 30,000 unit shares. Because you will use your unit of shares later on. I think somehow in the competition lah. Okay? That's for question 4. Sorry, I thought question 6 just now. Okay. That's all for today. Thank you very much for listening. Next week is the midterm.